And welcome to Recovery Report Live. I'm Dan Odess, CEO and founder of GlobalPro, where we have managed the recovery from more than $1 billion in loss and damage for policyholders, as well as helping thousands of policyholders place insurance for more than a decade. We have been at the front lines, helping policyholders, whether it's loss and recovery or placing an insurance, to make sure that they have the information they can use. And that's what the Recovery Report Live is all about. And that's why we go live right here every single week, every Thursday, 11 o'clock Eastern Standard Time, to make sure that you have that information. And today I want to focus in on an article that was just recently published. It was actually a blog post on the Property Insurance Coverage Law blog. A law firm out of Tampa, the Merlin Law Group, does a great job of analyzing many different key points and issues that are going on in the industry that are plaguing it. And we report here on the Recovery Report Live a lot about it. This one article, though, just resonated so much with me, particularly in light of the numerous broadcasts I more recently have done addressing these issues and the misinformation that is out there, whether it's the campaign by the Department of Financial Services with the Don't Sign Anything campaign, which, as I pointed out many, many different ways, certainly gives the wrong impression or is a little bit deceptive in the way in which it's delivering the information. Because, again, it's not highlighting your obligations as a policyholder or your rights to representation. It's simply saying don't sign anything. It's what it says. And quite frankly, my opinion of it is I feel particularly the initial messaging of it was incredibly deceptive, and it did not give policyholders the information they truly needed. Some of the data was coming out of some of these town halls that they were having and things like that. If you know anything about this business, you were kind of shrinking, squinching your face at it, going like, really? And you had numerous advocates for policyholders reporting immediate issues on the ground, dealing with insurance companies, the reluctancies to properly coordinate inspections. We saw it firsthand with some of our policyholders in the insurance companies, where they would just show up at job sites or properties that were damaged and devastated by these more recent hurricanes. We've asked for copies of licensing for insurance independent adjusters. Often don't have them. It's just many things that are required of these insurance companies are quite frankly not happening. And when you have a general messaging, the general messaging of don't sign anything, I can only imagine what's going on for those policyholders that believe that they can do this working with their insurance companies or their agent or broker are going to assist them in some way, when in fact that's not what they do. But some key points to take away from this recent article, make sure that link is down there in the bio. It focuses in on the exaggeration of fraud incidents. It focuses on the statistics and some of these issues, reliance on statistics that are many decades old. Things, and it talks about the impacts on consumers, the motivation behind the claims, the criticisms of evidence, the regulatory implications. Ironically, again, many of the issues that I've been talking about exhaustively here, especially in light of the recent campaign of the Don't Sign Anything and also the fallout from Hurricane Ian, where you had these whistleblowers come out and basically say, I did not write those estimates. Those are modified estimates. They have my name on them. They're significantly underpaying claims. There's a massive amount of claims not being paid as a result of these hurricanes. The insurance companies are trying to chalk that up as, oh, there's a lack of coverage or understanding of coverage, higher deductibles. Well, all of that's been lobbied for, and those changes have been approved by the Department of Financial Services. So if in fact that is even true, again, that's that's a consequence of shrinkflation. That's a consequence of largely anti-consumer legislations have been passed. And let's not mention the millions upon millions of dollars that have been poured into the campaigns for many of the public officials that have been championing these changes that are not in your interest as a consumer. One of the things that this article does, and it breaks down, is it goes into the central argument for stakeholders with regards to fraud statistics, the basis for which the legislators and many others are using to proffer this idea that more change needs to be made because the insurance companies are the victims here. Yet the reality of it is that with the massive premium hikes, and the lack of coverage in these policies and rising deductible issues. And really what that is a reaction, right? It's a reaction by the market to how do we save money here when the rates are going up so high? Now, you're really not even saving money. It's just, well, how can you find something that's less expensive? So it's in again, the reliance in this, in recent article that was published in the Insurance Journal and other places, was on statistics and stuff that was basically saying that there was like this blanket 10% of claims being made are fraudulent, when in fact further evidence may suggest that that number is a fraction of 1%, not even a percent, but a fraction of 1%. Rather than 10%. And also, we've talked about in prior broadcasts about the basis for some of this litigation, anti-consumer legislation that was passed, and the basis of it is questionable, and quite frankly, based on the information that has been provided to the public by advocates for consumers, is not true. It shows that there, in fact, is not a direct correlation between increased litigation and the cost of insurance, and many of the things that the insurance companies are leading us all to believe as to why there needs to be rate increases and further restrictions on consumer advocates like public adjusters and lawyers. Again, it's the things are not connecting. I even touched on once before this issue of the insolvency of these insurance companies, and many of the reports citing nothing to do with the litigation that was claimed to be causing financial issues and strain for these insurance companies. So let's just run through a few key points that I wrote down. I was always like looking through this thing. So exaggeration of fraud incidents. Lobbyists may claim inflated numbers for fraud cases despite actual evidence showing a smaller problem. This tactic can be used to create a narrative that aligns with the industry's financial interests, right? So we talked a lot about that in many, many different prior broadcasts. Impact on consumers. These misrepresentations often lead to higher premiums or reduced payouts for legitimate claims, right? So when you get that sentiment, that feeling, the emotion that, and you build this narrative around the fact that that there's a bunch of fraudsters out there, when in fact there's very few. A little chip on the shoulder by the adjuster or by those that are reviewing this, and they're really not there to the benefit of the consumer. And there's two guiding principles for insurance: fiduciary obligation, indemnification, right? So you have the indemnification, which is to put you in the pre-loss condition financially, and the fiduciary obligation to pay on that promise, right? So, again, if you erode or you create this idea, this narrative that people making claims are fraudsters, quite frankly, it makes it very hard on that. So consumers may also face stricter scrutiny during the claims process, making it harder to recover for covered losses. We are at our worst when we have losses. We need help and support, right? We talk about a lot of community efforts to do that, but we're talking about a contractual obligation of an insurance company at this point. You pay them a premium, they owe you the money back. That's how it should work. Motivation behind the claims. Insurance companies and their trade associations may push a fraud narrative to influence lawmakers and regulators. The goal could be to gain more lenient regulations or stricter anti-fraud laws that benefit the insurance company's bottom line. And I'm going to get to a really important couple of numbers for you guys to chew on. Some insurance companies, actually name them and give you some of the information on it. Criticism and evidence. Critics argue that the industry's portrayal of fraud often lacks transparency or is not supported by independent research. Data presented by insurance companies may not account for claims unjustly denied or underpaid. And we see this a lot. And in fact, if you look at the outcomes of a lot of litigation that I have firsthand seen, where you had one insurance company after Hurricane Irma, generally across the board, who is selling insurance to condo associations. We, in fact, in a corporate depot asked, are they aware of any claims they've paid? And they could not answer the question. Because the reality of it is that while we had, I believe, no less than 5 of these claims, which are multi-million-dollar claims, and I can say that emphatically because they were paid out eventually for millions upon millions of dollars. This said insurance company basically said either the claims were under deductible or not covered by the policy across the board, and their corporate representative could not even point to a claim that they had paid from the actual hurricane in the Miami-Dade County area. So it's interesting to point out that fact we see this often. In fact, we have a claim right now from one of the more recent hurricanes where day one they're asking for proofs of loss. They're asking for certain information from the insurance company. They involved an attorney as litigation counsel. They direct us to send all correspondence to the attorney, not to the adjuster. We ask the attorney, are you adjusting the claim, or is the adjuster that's assigned to the claim adjusting the claim? They don't. The adjuster shows up at the property without even scheduling, coordinating, or giving any sort of notice to either the policyholder or the insured's public adjuster, us. There's so many things wrong with this scenario, and this is actually going on right now. It's a real case that we're dealing with, and there's again this idea that if you make a claim, you're a fraudster, seems to be the guiding issue here, right? Regulatory implications. Exaggerated fraud statistics may drive policies that prioritize the industry's profitability over consumer protection. And I want to move right from that into some other things. So I did a quick search, and I was looking on the internet. I was like, you know what? I'm kind of curious about the top performing insurance companies. We're coming to the end of 2024 here. A lot of the motivation, obviously, behind this narrative that has been painted, particularly the last couple of years, but and truly in Florida, with regards to consumers versus insurance companies, rather than insurance companies protecting consumers, it's literally been this battle, right? And this idea of insolvency and the market not making money. And so I just did a quick search, right? Like, what are the top performing property insurance companies in the United States, evaluated based on market share, financial stability, consumer satisfaction, and product offerings, right? So I generally wanted to know. Number one, State Farm, right? Founded in 1922, State Farm is the largest property casualty insurance company in the United States, holding approximately 18.42% of homeowners insurance market share. Now, again, I have many different references here. This is where this information is coming from. These are not my opinions. I'm simply providing information as I found it on the internet. Feel free to fact check it if you want. But State Farm, right? State Farm can't sell insurance primarily in Florida property insurance. State Farm, they pulled out. There's not a value to them. There's very few markets that we see them. Let's say State Farm maintains robust financial health with assets totaling $294.82 billion and equity of $116.23 billion as of 2019. And they offer many varieties of different things. Now, Allstate, number two, this is actually in order, established in 1931. So first one was in 1922, this is 1931. Allstate is the second largest homeowner insurance provider with a market share of 8.77%. Financial strength, Allstate reported direct premiums written of $45.5 billion with a loss ratio of 75.39%. They offer a bunch of variety of different products. USAA, founded in 1922, another very old, well-established insurance company. They market share is about 6.67%. You have Liberty Mutual, established in 1912, 6.41% of the market. The company's reported $48.2 billion in revenue and $156 billion in assets of 2021. You have Farmers, 1928. Market share is 6.36% of the share of the market. They wrote premiums $26.4 billion with a loss ratio of 64.47%. So those are your top five performing. Now, I took that information. Okay, so those are your top five largest market. I'll just reread that back again. So it's the top performing property insurance companies in the United States, evaluated based on market share, financial stability, customer satisfaction, and product offerings. All right. Now let's flip the script here. All right. Top five insurance companies in the United States: State Farm, Allstate, USAA, Liberty Mutual, and Farmers. Okay. Have faced various consumer complaints and legal challenges over the years. Right. So let's talk about State Farm. They were number one on that financial list. Hurricane Katrina claims handling. In the aftermath of Hurricane Katrina, State Farm was accused of improperly shifting wind damage claims to federal flood insurance, thereby minimizing its own payouts. This led to a $100 million settlement in 2022, resolving allegations of false claims submitted to the government. Radcliffe versus State Farm. Following a 2006 hailstorm in Indiana, State Farm denied numerous claims. Contractor Joseph Radcliffe, who assisted policyholders, was accused by State Farm of fraud. That's why I included this case here. An advocate for the consumer is accused of fraud. After charges against him were dismissed, Radcliffe sued State Farm for defamation and was awarded $14.5 million, a decision upheld on appeal. So again, policy violations. In July 2023, a class action lawsuit is filed against State Farm in Illinois, alleging the unauthorized sharing of individuals' health information with a third-party company violating state privacy laws. Again, all right, so let's move to number 2. Allstate, overcharging policyholders. In May 2024, a U.S. court approved a $25 million settlement in a class action lawsuit accusing Allstate of overcharging auto policyholders based on their willingness to pay higher premiums, a practice known as price optimization. The settlement included compensation for affected consumers and an agreement by Allstate to cease such practice in California. Claims handling practice. Allstate faced criticism for its claims handling methods and allegations of unfairly denying delaying claims to maximize profits. This practice has been the subject of various lawsuits and regulatory scrutiny. There was a Good Hands to Boxing Gloves case that I've noted before, and there's a whole book written about it, and some of their practices and everything else. So then moving to number 3, USAA. Claims denial allegations. USAA has been criticized for denying or delaying claims, particularly aftermath of natural disaster policy, has reported challenges in receiving timely payments, leading to legal actions and regulatory actions. There was a class action lawsuit alleging underpayment of claims and proper handling of policyholder funds. These result in settlements and changes in company practices. There's information out there about that. Liberty Mutual, overcharging in Florida. In June 2024, Liberty Mutual was mandated to refund certain Florida customers a total of $4.7 million plus $560,000 in interest due to overcharging on policies. Claims handling complaints. Liberty Mutual has received consumer complaints regarding handling unfair denials and delays. Again, more legal action, regulatory scrutiny, farmer insurance, allegations of claims denial practices, legal settlements for these issues. All of this, again, available on the internet. Not my opinion. Again, I just was literally using Google, ChatGPT, and various other sources to find this stuff. And again, all of this has links to this information. You can see it for yourself. Nothing in there. Regarding my opinion, I'm simply drawing a correlation between the recent blog post, points that were made in there, some of the things that we are seeing out in the environment. What are our top performing property insurance companies in the United States doing, financially? And then of those top 5, you had several fall into the category here. Top 5 insurance companies in the United States have faced various consumer complaints and legal challenges over the years. So looking at, top performing insurance companies and some of the issues that they're dealing with on the consumer side of stuff, because again, there's this correlation between anti-consumer legislation and the need for it in order to make it a better market in Florida to be able to sell better insurance at a better price. But again, our rates continue to go up. We see the actions of insurance companies in the field that are difficult to deal with and manage and navigate for the policyholder. Yet there's certain campaigns that misconstrue these issues and place a lot of blame on the consumer and their advocates, whether it's a contractor or a policyholder advocate for, let's say, a public adjuster or a lawyer, for the plaguing of issues that the insurance companies continue to complain about. And I wanted to look at these issues, digress, analyze it, look at what's going on here, what is being sold to us as a basis for these issues and changes, and what is actually happening. And there's a lot of questions regarding the statistics that are being used. This more recent one is just a general, and again, I was giving general market information because that's, quite frankly, that's where the blog focuses on, just a market information. Whereas specific to Florida itself, I was not giving you the specifics on the top 5 in the state of Florida. I was just simply looking at the market because the blog, again, was focusing on the market as a whole in the United States, and some of the information that was being used by the industry to move on legislative action, and some of that information, as we see pointed out by various other experts in the field, is questionable. And again, I'm simply giving the details and statistics as I've been given to me from the information that I can find online, in trying to understand where the issue is for these insurance companies. I understand fraud is an issue. I have been an advocate for more licensing and more bonding requirements and more education for consumer advocates over the years. I've been to Tallahassee. Partner and Rob Bowlby spent some time in the Texas legislative level, as well, pushing for better protections for consumers, right? We want to make sure that everyone is acting appropriately. It's better in a fair market that we do these things. But to finger point and say that the only issue is or may be largely caused by consumer advocates and policyholders and fraudsters, quite frankly, the data information, when you analyze it further, is either old and outdated, or substantially doesn't support it, and it's more of an opinion than it is fact. And here we are today dealing with these things. We want to do the best that we can for policyholders. We want to make sure that you have the information you can use. That's what the Recovery Report Live is all about. This isn't to place blame on insurance companies for being bad people, because quite frankly, a lot of people that sit on the other side of the table oftentimes in the negotiations of these claims are good people, are decent people, are people that do want to help the process. Now, they're not there to advocate for you as a consumer. And that's the problem I have, is when the legislator or elected officials go as far as this to basically insinuate that you should in some way trust your insurance company, when in fact everyone that is on that side of the table is working for the insurance company. And there's so much focus on profitability. I believe there's a conflict in those two things and those interests there. On one side, you want to be profitable. On the other side, you effectively paint every single consumer advocate or contractor or anyone else as a bad person, or a lawyer as a bad person, as a fraudster, as taking an advantage, when it's just quite frankly not true. There's so little evidence to support and to insinuate those things that's based on any sort of concrete evidence whatsoever or fact. It pains me to watch what is going on here, and I believe if there was more consumer protections and more advocacy for the consumer, that we'd be much better off in Florida, Texas, and many other states right now. And so my hope is that things will get better for all of us. But again, be mindful, be concerned for what is transpiring and going on in your market, and be concerned for yourself if you are not represented. If you do see your claims being denied or delayed in any sort of way or underpaid, reach out to us. Let us know what we can do to assist you. Check us out online at globalpro.com. If you haven't already, like and subscribe on all of our social media channels, including YouTube, because when we go live right here on the Recovery Report, we want to make sure you get the notification so you get the information you can use.